Welcome back. This is Cher, Head of APAC Products and Support in the Investment Intelligence Division. In the first part of the US Market Structure series, I shared that 60% of all the US trading volume are being matched in the 17 trading exchanges. So what happened to the remaining 40% of the trading volume then? Exchanges are not the only place a trade can be matched. Brokers are also able to match trades off exchange using an ATS, for example, dark pools, or internalizing executions. However, all exchange transactions must be reported for the benefit of all market participants. Reporting for the approximately 40% of trades being executed off exchange is facilitated via the Trade Reporting Facilities, or TRF, of which there are 3 in the US. Nasdaq operates 2 of the 3 TRFs, namely the FINRA Nasdaq TRF Cataract and the FINRA Nasdaq Chicago. Via these venues, Nasdaq is responsible for reporting the overwhelming majority of all transactions occurring off exchange. The pie chart on the right illustrates a distinct breakdown of the on-exchange and off-exchanges market share. This is unlike the typical breakdown we will see in the APAC exchanges. Having gone through the basics of the US market structure, including the trading and listing venues, how trades can be executed on or off exchanges, and why it is important to understand these differences, I would like to spend the next couple of minutes highlighting Nasdaq's market share. Nasdaq disseminates the most trading activities across all venues on a daily basis. Using this year's September trading volume, for Nasdaq-listed stocks, Nasdaq disseminated more than 63% of the traded volume, while for NYSE-listed stocks, it disseminated more than 44% of the traded volume, the most among all exchanges. This means among the 17 exchanges in the US market, Nasdaq disseminated the most liquidity for both Nasdaq and NYSE-listed stocks, for both on and off exchange trades. To help everyone understand the US trading volume market share further, let me use a stock listed on NYSE as an example. The stock is NIO, an electric car manufacturing company based in China. It also happens that this stock is one of the highest traded stocks in NYSE over the last couple of months. The chart above is a breakdown of how Nasdaq market share between September to October this year was over 45%. This is due to Nasdaq's leading position in the proprietary TRF data space, which alone accounts for nearly 35% of the total volume for NIO in the same period. This example shows that whether a stock is listed on Nasdaq or NYSE is not necessarily a determining factor for investor. The mandate, however, to report off-exchange trades to a TRF is crucial to determine the quality of market data products in today's markets. The increase in retail order flow has caused an increase in trading off exchange and therefore an increase to trades reported via the TRF. To end off, in both parts of the US market structure series, I have covered that the difference between listing and trading venues, what are on and off exchange trades, and lastly, Nasdaq exchanges having the majority of the US trading market share. Thank you. If you are looking for more content on the US market, feel free to visit this website.